Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Monday, January 25th, 2016, and this is the Daily Report for Gold and Silver. We have a nice rally underway in the precious metals market, specifically gold, up about $8-9 on the day, but more importantly, trading well over that elusive $1,100 mark, currently at 1106 and change. That is off of a high of 1108.63, so we're just a couple dollars off the high, and the low today is 1097, which is roughly where the market opened. So we have seen this market take off and take off in a genuine manner. Equities markets is under pressure, down in triple digits. We'll have to see how that closes. Oil, which was up about 8% on Friday, is now down about 6% today. So the market has pretty much taken back any kind of gains that we saw in that. We'll look at that along with some very, very key charts in gold, all on today's daily report. So traders, the first chart that I do want to look at today is a very, very long-term study. It is a line chart, so it means that it's pegged off of closing prices, and that's why you've got this high up at around 1900 as opposed to like 1910 or 1920. So this is a line chart on a closing basis. We do have two different fib retracements, but the important fib retracement that I draw your attention to is the shorter of these two. Really begins at around just below 600, 557 up to 1900. And when we do that and then look at a 61% retracement level, it takes us to 1064, pretty key number. Also, it is a harmonics. And what I mean by a harmonics is that when we look at the 50% retracement of this longer of the two, this starting at about $230 per ounce, going up to the record top, you get a 50% retracement at 1070, 1064. Those are virtually identical when you consider the range that we are looking at between 300 and 1900, tremendous range. And here's the key. We've talked about the fact that if we were to find any kind of potential support in the market, this would be about the last kind of a line in the sand, so to speak, that last Sebastian, and we've gotten a pretty nice bounce off of that. Now, we're certainly not out of the woods, because the one thing that you want to consider is that if we look at our upper level resistance based upon these tops here, so we just basically put in a trend line to account for this triple top, we would really want to see this market break above that, and that would really signal a bullish return or a extended rally mode, which really fits into the alternate count that we have been looking at, the generic count of gold, which is basically looking for a termination of an A wave, this being a major fifth conclusion right up here at our record high, and then we've got something like a 1, 2, I apologize, let me change the color of this pointer here so that it kind of sticks out a little bit better. But we've got a 1, 2, then we get our 3, which takes us down to this low, and then we get a series of triangles. In fact, let's go ahead and bring that up. And so traders, I've done just that. We've gone ahead and brought up this alternative account, and when we look at the count, the key is that whether or not at some point, once again, this takes us to our major fifth. We've got our 1, our wave 2, then our wave 3, and then we get a couple of compression triangles. This, of course, is a diagonal wave 4. So you've got 3 to 4, and then, of course, you've got waves counts. This is our sub count, of course, behind our intermediate. Intermediate is in red. Major is this 5 and this A. And then we get our sub count, which we have our wave 1, wave 2, wave 3, wave 4. And the question is, have we concluded our wave 5? Now, in essence, we believe that there was the possibility that we would see one more downdraft to conclude 5 of 5, 5 of 5, and then conclude our 8. However, the real determining factor on if in fact this is ended, when we look at this, and this again is that resistance line that we're drawing in roughly in the same way, although now we're looking at it in a candlestick chart, this actually could be our conclusion of our fifth wave in here. And the way that we would know that is we would get our break above this long-standing resistance line, and it is that resistance line that we have been talking about. Now, traders, we mentioned the fact that once we got over 1100 on any kind of protracted basis, that we certainly at that point would want to look at a long position in the market. And we're definitely getting that right now. And so for that, we really want to go ahead and really look at our daily chart. Just gone ahead and pulled that up. I'm going to go ahead and blow that up. And when we look at this daily chart, about the only thing within a candlestick that we can see is an engulfing bullish. And of course, to take the engulfing bullish, we would want to wait one more day for confirmation, which would mean that in tomorrow's trading, we have a green candle with a higher high and a higher low. And we'd want it to take out, really, in terms of a price point, this top right in here that we have not taken out yet, which is at 110. That is the last area, because if in fact we can go in and you can see that this high kind of matches what was the high today, roughly 108, 109. So we really want to take out 1110, excuse me. And if we can take out that 1110, traders, you can go ahead, enter a long position in the market. In terms of stop placements, it's got to go under 1100 and go under 1100 substantially. And that means either 96 or 97. That's where I would recommend placing a stop. For right now, let's see if we get follow through, because the one thing that we have seen in this market is that although we will get good action for a day, maybe 2 days, we don't get these extended rallies like we got here. We had 1, 2, 3, 4, 5 days of extended rallies. But if we look, we've had pretty much sideways trading activity throughout November, December, the little spike into January, then back into sideways. So we want to really see how this develops. But the signs at this point are pretty solid. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.